Okay, 5 minutes, guys. 5 minutes away from the closing bell of 2016, the last one. Look, get over it. The Dow just couldn't pull off 20,000 before the year end. We're at 19,783, but my guest called it back on October 5th that we would see Dow 20,000 before the inauguration. That's January 20th. Will it happen? The man with that big call is Jordan Kimmel, Fact Asset Management co-founder and portfolio manager. We're also bringing in Griffin Capital Securities chief economist Randy Anderson. Hi, Randy. Great to see both of you guys. Look, can we agree that investors who were scared off by all of the drama of this year, whether it was the early issue with China or Brexit or who knows what else, that they were wrong, Jordan?
Well, they were wrong, Liz. This is an uptrend, and I don't know why people are fighting this uptrend or waiting for the next shoe to fall. If you see this as a bear market or you don't understand this as a bull market, this is an unloved bull market with the advanced decline line looking great. More important than anything else is that the invested public is just about to get in. They haven't even touched this market for years.
Which worries me, because when the herd jumps in off those sidelines, that's when it sometimes is time to get out. But you say Dow 20,000 before January 20th. Yes or no? Do you stand by that?
Absolutely, 100%. But that's just a little one-day shot.
Randy, what kind of economy is President Obama handing to Donald Trump on January 20th?
Well, the economy is actually in pretty good shape. And by the way, I agree with your other guest. I think we're definitely going to hit Dow 20,000 before the market corrects. There's a lot of excitement in the market. The consumers haven't even got back in there and started spending. And usually when you see such a rally after a presidential election, the next 6 months are also full of good news. In fact, while this is the strongest one that we've seen in any presidential election, there's been 5 previous really strong results following an election, and they've all had another 10% growth in that marketplace. Now, I do think that we will see a little bit of a pullback later in the year. While the economy is strong, it's almost too strong to get the desired results that Donald Trump is forecasting. He's forecasting 4% GDP growth, employment falling further. It's really hard to do because, listen, GDP is at a good number. Consumption drives GDP. The consumer is already strong. Employment rates are already low, and don't forget, we will have a little bit of a headwind with the tightening of monetary policy. But with all that said, we're in for a pretty good start to 2017 in the equities market.
Okay, we got to get through Q1, right? And Jordan, what do you expect for people who are watching right now and saying, I want to buy stocks, but I'm still a little nervous?
Well, you have to start, dollar cost averaging if you're not in, but find something you're comfortable to buy. The message I've been giving people is that active does beat passive. These passive guys sold everyone average for the last 10 years somehow. People accepted average. But more importantly, don't buy into story stocks. You got to watch your valuation. And I've been talking for years now about companies with high integrity, not just beat by a penny, but absolutely have conservative accounting, have an independent board, have CEOs that don't vote on their own salary.
Well, let's put up some of your names right now. U.S. Concrete, Argon, Apollo, WellCare Health Plans. As we put those names up, what's the common thread?
Well, the common thread is a new economy. It's America. It's not international. I think, people looking for sexy stories. U.S. Concrete doesn't sound sexy. It's been in my portfolio for 2 years, and I'm telling you, it's sexy.
Randy, earlier we had Teddy Weisberg, one of our traders from the floor of the New York Stock Exchange, say Donald Trump and his economy, which is lower taxes, infrastructure spending, and fewer regulations, will bring about what he called a white swan event.
There you go.
That's obviously positive. What is sort of the one red herring, one thing that you're worried about here? Is it the Federal Reserve perhaps having been behind the curve?
Well, it could be that the Federal Reserve tries to raise rates too fast. I don't think they will. In fact, I thought they'd come out with the dot plots and show that they were going to raise 4 times as we went into this year. And my big motto for the entire year, instead of everybody talking about 3s, 3 Fed raises, I think there's going to be 2 because the economy is going to grow, but not that fast. Instead of the 10-year Treasury being at 3%, I think it's going to have a 2 handle on it, maybe the mid-2s. Instead of GDP being 3 or 4, I think it's going to be a high 2% type of number.
Randy, Jordan, great to see you, and I want to thank our viewers for an incredible 2016.